Thanks a lot for joining me on this Thursday afternoon market recap. Before we move into the analysis, however, I just wanted to thank everyone who wrote in the comments section yesterday. That feedback was greatly appreciated. I will say also that a lot of that criticism, or at least the points of, I guess, things doing a little bit differently, right? I will start incorporating that into the market addresses next week. I will say too that tomorrow I will not provide you with the market recap as at the close on Friday. I will leave that for more so a detailed conversation that we are going to have in that pro analysis class come Saturday morning, all right? So if you want to have a look or look into that and understand what we're looking at for the week upcoming, also some of the trade analysis, I encourage you to do so by signing up into that pro analysis class. However, for the time being, let's have a look through what took place during today's session of trade. The Dow Jones Industrial Average, it closed down 83 points. This is something that we have been somewhat expecting, somewhere very close to this pivot. This has been an open window towards the back end of March. We have rallied back up into it. We've seen a bunch of candlesticks with upper wicks. We saw that little push above it. This was on Tuesday. However, since Tuesday, the market has slowed down a little bit. Today, of course, with the very slight pullback. We were left with that of a shooting star candlestick. We closed down 83 points, but this is not a reversal signal, so to speak. This looks as though we are going to set up a little bit of a sideways congestive sort of pattern. It might set up potentially in that of a bull flag. I mean, this is simply a little bit of guesswork at the moment. The pattern itself hasn't set up as I guess pronounced as what we can or what we'd like to see moving forward. But this just looks at the current date a little bit of a controlled pullback, which is of course respecting this pivot. All right. If we start to see any major selling days, all right, take place, especially during tomorrow's session, you want to pay attention to the pivot coming in at roughly 24,250. Oftentimes what happens is that if we had to call this of a descending triangle, and if this is going to be the first breakout of the descending triangle, very similar to, I guess, all-time high breakouts or breakouts above resistance areas, or at least horizontal areas of resistance, generally you will come on back down and retest the breakout pivot. So what I mean by that is if this is a legitimate and true breakout, it wouldn't be all that unrealistic or really not all that expected or unexpected to see this come on back down and to retest this resistance area as new support. So we're going to have to monitor this on the Dow Jones Industrial Average. As I say this, you can see also that the oscillators are coming back up into somewhat overbought territory. However, again, as you are very well aware, we can remain overbought for prolonged periods of time. It sort of does at least support the notion that we might see this retest of this area. Above all else, you have to understand this market is still macro bullish, also intermediately bullish, given of course that we are still holding above this support area. On the Dow Jones Industrial Average, we're also holding above the respective support areas on the S&P and the Nasdaq too. But you can see again, a lot of what happened today on the S&P 500 was essentially closing that very brief and very small gap. This was between Monday and Tuesday this week. We closed down 15 points, but at the same time, we have a long lower wick. So we don't have that of a spinning top candlestick. This is more so that of a hammer candlestick at support. This isn't enough at the moment to take long trades. It's not enough to actually take short trades either. It's simply that of a temporary wait and see, a holding type of resting pattern, so to speak, where we simply allow tomorrow's session to unfold before we can really advance any further positions that we've already sort of undertaken at this current point. We're very profitable in the spiders trades, we're very profitable in the diamonds trades, and also on the Qs. Now that's a pretty decent segue into the Qs, the Nasdaq again. Just like the S&P and the Dow Jones, it did close down. It was very close to 60 points. This is not what we call an evening star reversal. So don't really think about that 3-day reversal pattern whatsoever. This is just simply the nitty gritty, the nuts and bolts of the grind higher, which is still in effect. This really looks like we are still setting up this channel consolidation, and there's no reason to expect that we are going to see a complete roll from the midpoint of this channel and that we are going to come back down to 6,900. No, this at best, or at worst, I should say, is probably going to result with a little bit of choppy behavior, maybe potentially even something that we saw, say, towards the late stages of February or the early period of March, a little bit of a shakeout at the midpoint of the channel itself until ultimately we see that true and full rotation back up to resistance areas. We've got fantastic targets Across the board, 7,467 on the NASDAQ. We have 26,435 on the Dow Jones Industrial Average, and again on the S&P 500 you can see this open gap, which is still a very fantastic magnet, which is going to pull this market higher into the future. The good news, however, is that if you look at the price action now and you say to yourself, well, what happens if we do see a little bit of selling? It's not something to be fearful of. It's not something to be upset about. It's not something to be frustrated about. The reason I say that is because what it does essentially is that it opens up the door again for you to position yourself back down at lower prices. So, I mean, if the market itself was to pull on back down and say it does get the retest of this pivot, what you still need to be thinking about is the move, okay, all the way back up to the respective resistance areas. And what that is going to open the door really for you to do is to actually begin opening up some diamond positions, some Q positions, or some SPY positions moving forward. It's just going to be another opportunity to re-enter into trades that we began placing down here at the pivot just shy of 24,000, but also adding to over the past 2 to 3 weeks as well. A lot of those positions have been closed out, or at least portions of those positions. And now is simply the waiting game as a technical swing trader to allow the market to sort of, do its thing naturally until we get that next legitimate buy or sell signal moving forward. There's no reason to be bearish on this market. The market is still structurally sound. Everything is A-OK, even though that we have pulled back over the past 2 sessions across the board. Now, when it comes to our top 12 individual trade lists, I'm not going to go into absolute detail. I'm going to leave that for Saturday. Apple is pulling back. That's all well and good at the moment. Not a whole lot to recap there. Amazon has outperformed really this week. It closed the gap. Not only that, on the back of earnings, it has shot to the upside. I think there are over 100 million subscribed Prime members now. So again, very favorable earnings for Amazon. It looks as though we are going to not only tag these highs very, very soon, but there's a good chance that we are going to overcome and continue above the most recent all-time high, which is falling just shy of $1,620, so to speak. What this sets the stage for, of course, is NASDAQ, the market itself, or at least Amazon's a good indicator that the trend, which has been performing very nicely since 2009, or this big bullish macro uptrend, is not over. I mean, so if you look at Amazon, for instance, even Apple, a lot of these tech companies, Google as well, if we can first of all tag the high and then second of all overcome it, it's almost a guarantee that the NASDAQ is going to follow suit. So taking this full circle and going back into the discussion on the NASDAQ, yes, of course, the oscillators are moving back up into overbought territory. If we were fortunate, and I'm going to use the word fortunate, if we are fortunate enough to see this pulling back down, I know it's not going to be good for, a lot of people, so to speak, on the short term, but it is going to allow another great buying opportunity if we see these tech companies, again, overcoming their respective resistance areas. Generally, it works in synchronicity with one another, but if we do see a little bit of divergence between some of the larger sort of leading individual stocks in the market, I guess that the health of the broader sort of components of the NASDAQ, for instance, it could set up some absolutely phenomenal trades moving forward. It's something that I'll keep an eye on and I'll update you on as it continues to progress. We've seen Baidu again. This is still pushing above 230, which is fantastic. A pretty decent trade there. We've got Caterpillar. I think the majority of people have actually exited out of this trade again for some pretty decent profit. 146 was the first entry. Second entry was 151. We had to hold this over the weekend just past, but it's up here at 155, so all things looking quite good. On Caterpillar right there, COP, this is very important. COP had the first reversal, or at least intraday sort of warning signal on Wednesday's session. We saw this little pullback today on Thursday, but we still actually haven't hit the stop here at 65.35, which is quite good too. So there's a chance that COP, if you are in the trade and if you do have your stop at 65.35, there's a good chance that you're going to be triggered out of this on Friday, tomorrow. But again, having said that, this can still continue to the upside very easily as well. You've got a very, very profitable trade here. It's just a matter of time to see tomorrow whether or not you are going to see a little bit of a pullback, and that's largely going to be determined by the overall markets themselves. So a pretty decent trade there. On COP, we've got CVX as well. 113 was the breakout trigger. This is bullish, of course. We've had a secondary entry at 116.50 and a third entry at 118.50. You can see that we've hit 123.52. We did this on Wednesday. A very, very nice trade here on CVX. This is the first target. I'm hoping that you've liquidated this trade, or at least a portion of this trade. We do have earnings upcoming. The problem is, and I mean, this is not problematic whatsoever. This is an incredibly profitable trade. I'm very happy about the trade, and so should you. But in a perfect world, so to speak, 130.79 is a very nice target. I'd be very comfortable holding CVX to that target. However, we do have earnings. So you need to close trades prior to earnings. Don't hold trades into earnings. Don't hold trades, sort of speculating on what's going to happen on earnings. You get burnt. Sometimes, obviously, you won't get burnt. But if you do get burnt, generally you get burnt hard. And it's never a nice sort of situation to be in, okay? Google, we are again bouncing off from this 1,000 pivot. The entry here was $1,050 per share. We've had this target up here at 1,131. Here we are, we're closing at 1,090. This is a pretty quick $40 move in Google. A very nice little quick move. Look, I'd be closing this out tomorrow as at Friday. I wouldn't be sort of holding on to this. I mean, it's already a very profitable trade. But with, I guess, the volatility around with earnings season, we still have a legitimate target, yes, but having to close this trade out, and in a couple of days, I'd rather just take the profit on this, put it in my back pocket and have it in my back pocket before the week is out. That's a personal decision, so to speak. It's up to you what you choose to do, but a pretty decent trade there. Goldman Sachs, we are not in. This was the big engulfing candle, which happened, I think it was on Tuesday, wasn't it? It was too. And this was earnings related. I'm simply going to remove this. We had some pretty adequate opportunity to get out of this on Friday last week and also Monday this week. Since then, it's sort of stabilizing. So this is quite constructive, although we don't have a great trade set up now. I think if financials begin to stabilize, okay, across the board collectively, and if they begin to turn, all right, they hold their support areas and they begin to turn upward, I think we're going to have a lot of great trades in the financials to begin with, but also Goldman Sachs. Goldman Sachs is one that we haven't really traded all that much. I mean, I say that recently, of course, in the past we have, but recently it's been a little bit disobedient. We've sort of stayed away from it, but I think there's a pretty decent trade forming if we do hold that support area. IBM, a massive gap down during the week. It was looking as though we were getting the breakout. Earnings comes along, boom, to the downside. Another great example, illustrative example of a trade, 155.30, moving into earnings, closing the trade prior to earnings, and then a reversal in the opposite direction. We are holding support on this. So the best way to look at IBM at the moment is to consider this much like the Dow Jones Industrial Average or even potentially Caterpillar. Now, this is my own personal opinion. The reason I say that is because the structure, at least the chart pattern itself, notwithstanding, of course, this gap, all right, is very similar to the Dow Jones Industrial Average, which is the same structure just here, descending triangle. And also on Caterpillar, again, a descending triangle type of formation. Now, if I bring back up IBM, the only difference, of course, again, is the earnings gap. And generally when it comes to the interpretation of gaps, and of course, this really stems from Japan, we like to trade, or generally, the consensus is that you trade in the direction of the open window. There are a few caveats to doing so. However, if you see a stock after earnings gap in a certain direction, you just don't take the trade only for the reason of the gap. And a good example of this, or a good example of not necessarily taking a trade in the direction of the gap, is just here. We had an earnings date in October. This was last year, 2017. You can see the candlestick. It was a long day Morobozu. It did have that of an upper wick. Okay. It looked as though we were beginning to continue. However, we were at resistance. What happened? We rolled over and it turned out to be a short which came back down to close the open window. What I'm looking at on IBM, and again, this is my personal interpretation of this, is that we do have signals in the past that we are at a very important support area. And this gap has more or less been closed. I mean, it's not technically closed. It was left slightly open, the difference between October and November. But above all else, pardon me, I'm losing my voice a little bit right now, but above all else, we are at a legitimate support area. Okay, so I'm not looking to short IBM. I'm not looking to try and, place a pretty decent, or open a trade, so to speak, on the put side. No. If this begins to turn upward, if we start to see some reversal candlesticks like we saw in the industrial average, like we saw in Caterpillar, well, at best, again, this mimics that of Google, all right? A nice little gap in the bearish direction stabilizes that support, turns, and you take the bullish trade. This also fits the narrative and the trend of the broader markets too. It's not ready yet. So I'm beginning to describe this setup on IBM, but I'm telling you it's not ready yet. The best signal that we have, once again, is that even during Thursday's session today, we have that long lower wick as well. But that is not a reversal signal. That is not an indication to go long. We don't really have any other confirmation other than we're simply only barely holding on to support. But I am looking for that gap to ultimately be filled. It's just a question of, are we going to see a very quick reversal back up to close the gap, or are we going to have to go through a sort of a longer type of process? We've got Netflix again, very close to breaking out at 335. Good volume on Tuesday. The longer we sort of hold 330 pivot, the better this looks. So this is going to be something that I speak about in great depth on Saturday. It's something that we might have an absolutely fantastic trade setup come, even as soon as Monday next week. It is a trade really that is set to move. And I am very excited about that on Netflix. And the final stock here is that of Tesla. Tesla's holding, surprise, surprise, at the 300 handle. A lot of this chop that we're seeing is what I've described already. It's not ready, so to speak, yet. We need to set the parameters, the true parameters of both resistance and support. Once we get that, you're probably going to see that of a Bollinger Band squeeze. And at that point, if we can, we'll try and manage a trade. Otherwise, we've got earnings, which is scheduled for early May, which is going to be very important for Tesla. Very important. A lot of people starting to worry as to the longevity of Tesla, and I guess the financing and the cash burn that it continuously moves through. There's been a little bit of mayhem and chaos in the private bond market for Tesla. Some of their bonds have been absolutely tanking over the past number of months, but it has seemed to have stabilized. You can see prices back up at 300, a very quick reversal off from the 250 handle. Right now, stay away from it. We are going to have a decent trade, but it's just simply not ready yet. I will stress also, if you have any questions at all, please email me, success@pivotpoint-trading.com. That's going to do us for Thursday. Again, I just wanted to thank you. I wanted to thank you for writing the comments that you have done so. I am going to take them on board, and I will begin incorporating some of that feedback into the market addresses come next week. I want to wish you all a very nice and enjoyable weekend, and encourage those who are not in that pro analysis class to have a look, to partake in that, to participate in it, to watch it over the weekend, and to really find confidence as you move into the next week upcoming of trade. It's a really great way to set, I guess, the tone and the stage of the market upcoming, and to understand what it is you should be looking for when it comes to trade opportunities moving forward. So on that note, everyone, I'm going to say farewell. It's James signing off on behalf of Pivot Point Trading. Enjoy your Thursday and also enjoy your Friday too. All the best. Farewell.